Hello, everyone. It's 8:54 a.m. West African time. That's about 7:54 a.m. UTC. And you, good morning to you from this part of the world. And for those of you tuning in from a different time zone, I wish you a good afternoon and good evening. Well, welcome to our midweek review of the Forex Morning Mastery. It has been an exciting week so far, and I couldn't be happier with how we've navigated the markets together since the beginning of the week. Remember, we have been monitoring three financial instruments, which includes the US All Spot, the USDJPY, and of course my favorite amongst them, which is the XAUUSD. And of course, we've done pretty well across these assets, especially on the US oil. We had two positions, remember, at the beginning of the week, all of which its TP target, as we saw, crude oil has been pushing towards a 2-week high, fueled by geopolitical tensions in the Middle East, US sanctions on Russia and Iran oil exports. However, we are also seeing some pressure from surging US crude inventory, which could limit the further to the upside. So the balance between supply fears and demand uncertainty has been keeping oil a little bit volatile in the last 24 hours. So we will be watching for the next big move during today's session. So if you're a fan of the US All Sport, you want to be part of this session. Then, of course, the USDJPY also did very well in the last 3 days. Remember, we bought the USDJPY at the beginning of the week. And, of course, the yen has been under serious pressure for about 3 straight days with Trump's tariff policy weighing on Japan's economic outlook. At the same time, the Fed Chairman Powell's hawkish remark has also reinforced expectations that the Fed won't rush to cut interest rates anytime soon, which has boosted the US dollar's strength and helped the USDJPY maintain a strong position ahead of today's session. So we are going to be looking into this in a moment to see how we can actually navigate this market, how we can look out for new trading ideas going into the second half of the week. And finally, on my favorite assets amongst them all is the XAUUSD, which started the week on a strong note. Remember, we bought the XAUUSD at the beginning of the week, placed our TP target around the 2009.20, and we saw how price rallied towards the 2,900, 920 zone during the course of the week, driven by trade war fears and inflation concerns. And with Powell's hawkish stance strengthening the US dollar, we've seen some profit-taking activities in the last 24-36 hours, leading to a pullback in the moment. So we are going to be looking at how the geopolitical risk, the upcoming inflation data, could likely keep the potential for the bullish momentum. Is it time to start buying again, or are we going to be looking out for selling ideas today? So if you are a fan of any of these assets, stay tuned with me as we gear up for today's session. We are going to be breaking down the chart, looking out for key opportunities, and fine-tune our strategies according to what the market is doing at this particular point in time. And for those of you who are joining us for the first time, you are highly welcome on board. Very glad to have you around with us this morning. We run this session 3 times in a week, Mondays, Wednesdays, and Fridays, breaking down the market in real time to help us stay ahead of the game. So be sure to hit that like button and stay engaged in the comment section. So with that being said, here we will be diving right into the chart. And as always, the first thing we normally do every morning is to, of course, keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market today, and of course, which has been influencing the market so far this week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information and, most importantly, timing to strategically position ourselves for the next move. Now, based on the asset we are monitoring for this week, we have been focusing on features from both the United States and the Japanese economic dockets. Now, so far this week, we've had some interesting developments, which is more of the Fed's chairman's testification before the committee, which is still ongoing at the moment. I think it's going to last for 2 days. It started yesterday and is going on into today's session. And from the major highlight from this testification is the fact that he did acknowledge that inflation is still a little bit high, which signals the idea that the Fed may likely keep interest rate as it is for an extended period of time. So the narrative that started the year of a potential 2-rate cut for the year is now slowing down based on this new development, and this has further influenced the US dollar to the upside. So that is one of the major highlights we were able to get from yesterday's testification. So today we're still going to be looking forward to see what he has to say, as his narrative will definitely have a significant impact on the US dollar market dynamics. Then also today, Wednesday, oh my goodness, let me see, Wednesday, February 12th, we are going to be looking at another impactful event today in the form of the CPI data. Now, the CPI is the Consumer Price Index, of course, and for those of us who do not know, this data measures the average change in prices of goods and services in the last 30 days. Of course, it indicates the inflation level in the United States economic docket, and this is one important event everyone is looking forward to. So, a higher CPI usually signals rising inflation, which may lead central bank to raise interest rates, and this of course can strengthen the US dollar alongside. However, if the CPI comes in lower than expected, it may prompt rate cuts, which I doubt at the moment based on the current narrative, and could weaken the currency if that is going to be the case. So the CPI is going to be closely watched today, as they will be influencing monetary policy decision, hereby impacting the value of the US dollar. And if we look at the data here from what is going on, we saw that the previous month came in at a 0.4% and 2.9% for the month-on-month and in year-on-year respectively. Now, economists and market participants are projecting a 0.3% and 2.9% respectively for the month of February. So we're looking forward to see what the actual data will be. So like I said earlier, if it comes in higher, it could favor the US dollar, and if it comes in lower, it could be a disadvantage for the US dollar. So we look forward to see what is going to be happening on that one. So the timing is 1:30 p.m. UTC. That's about 2:30 p.m. West African time. So you want to be marking out this timing on your calendar. Now, later on today, we will be listening to the Fed Chairman's testification. So that's 3 p.m. UTC. I think it will start. There's another event everyone will be looking forward to. Now, while we prepare for tomorrow's session, I also want to mention that we're also going to be taking into account the producer price index coming up tomorrow. For those who don't know, the producer price index is also an inflationary data which measures the average change in prices. Now, in this case scenario is of the producers, that is what they receive for their goods and services, and it's a key indicator of inflation at the wholesales level. So we're also going to be looking forward to that one. And look at what happened the previous month. We had a 3.5%, and there is an expectation of a 3.3%. So market participants are projecting a lesser figure to the previous month. So these are the major events we are looking forward to ahead of Friday's trading session. And of course, we know that the anticipation of this event has a way of influencing how market participants will behave, which is what we are going to be looking at today in the form of structural details to help us strategically position ourselves for the next move. So with that being said, here we will be diving right into the business. Let's go into the chart to see what is really going on. And as always, the first asset we are going to be looking at is going to be the USOILSPOT, and we've done tremendously well since the beginning of the week. Remember, we bought the USOILSPOT somewhere around the $71.35 level. This happened prior to the beginning of the Forex Morning Mastery session on Monday, if you remember. So I did mention that I already have my buy position triggered at the $71.35 level, remember? And I did mention that for those who had missed out on that opportunity, that they should wait for price coming back to do a retest of that structure. And of course, we placed a buy limit around the $71.48 level, which finally got triggered. And we saw price move significantly into the $74-ish, dovetailing to about 190 pips before the consolidation and choppy conditions started during the New York session yesterday. And for those of us who are part of this profitable journey, well done and kudos to you for being faithful to our analytical approach. Now, as we head into today's session, now before I even talk about that, if you still have a buy position running at this point, kindly move your stop losses to secure them. I placed another buy this morning based on what I was seeing around here, but it appears that it is not doing very well at this point in time, as it's currently running with about 33 pips in loss at this point in time. So if you still have a buy position running, I mean from Monday or Tuesday's session, kindly move your stop losses. Let's secure some profit, as we may likely see some profit taking activity happen today. Now, before we dive into the technical details of what is likely going to happen today, we also want to try to understand what is driving this market, what is really influencing, and in fact, why did we see a surge in price? We talked about some of these at the beginning of the week, like the situation surrounding the global trade war, fears, and Trump's tariffs. I talked about Donald Trump imposing 25% tariff on steel and aluminium imports, and this also hinted at further tariffs on automobiles, pharmaceuticals, and computer chips. And from a theoretical standpoint, this is likely going to fuel concerns about global trade war, and this could increase demand for crude oil at the same time. Then we also talked about the fact that this whole situation can also increase inflation. And remember, the U.S. crude oil commodity is a US dollar denominated asset. So whatever happens to the US dollar has a high chance of influencing the prices of crude oil. So if the dollar increases in value, definitely crude oil is going to be much more expensive for other currency assets to buy, and this could reduce the demand and crash price to the downside. But if the value of the US dollar drops, this has a potential of increasing the demand for crude oil, pushing price to the upside. However, in as much as all of this is in play, we saw that the Middle East situation is looking looking less tense at this point. That is, if tensions escalate further, oil prices could rise based on supply fears, and a resolution or ceasefire extension could also ease the price of crude oil as well. So we need to also watch these Middle East tensions too as well to know whether we want to be holding on to the crude oil or not. And then we're also going to be watching out for sanctions on Russia. US placed sanction on Russia last month, and Trump is yet to lift the sanction, which is still affecting the supply from Russia and Iran. So if this sanction tightens further, crude supply concerns could drive prices higher. And we are also going to be tracking the US crude oil inventory report, which is coming up today and tomorrow. That is the EIA and the API report. So if there is high demand or supply cuts, we could see some bullish traction on the US crude oil market. Now, how are we going to navigate this market? How is the market digesting all of these informations we just listed now? Is it positive, or are there chances that we could see a bearish move today? Now, looking at the structure here, for those of you who are part of our session on Monday, remember we saw price breakout of this descending trend line, the resistant line of the descending channel we identified on the higher time frame. We saw the breakout happen here at the beginning of the week, and since then price had continued to climb, find new highs, breaking out of our key level at the $71.50 level. Now, with this situation here, there is a chances that price could do a retracement move. We all know that from a theoretical standpoint, when price breaks out of a key structure like this, price is likely going to come back, retest the structure in an attempt to continue the uptrend move. It could retrace back into the key level. It could even retrace further down into that support, that resistant line of that descending channel before it continues that uptrend move. And if we look at the distance between where price is right now and these levels, excuse me, we are talking about between 120 pips, excuse me please, to about 300 pips to catch, if that is going to be the case. So we do not want to miss out on these possibilities. So let's move into the structure. Let's zoom in to see what has really been going on here in the last 24 hours. So if we zoom into the structure, this is what I was able to come up with. After price action tested that $73.35 area right here, we saw a sharp rejection, which simply means that buyers found it difficult to break through that particular area. And of course, we saw the candle close in the form of a shooting star candle. And theoretically, a shooting star candle tells us that sellers are strongly present around this area. Now, the next attempt for buyers to break out of that structure failed, as you will see, around the $73.15 level. Price action dropped from there, giving us a lower high, which is a sign that price may likely drop to the downside. And this could be as a result of profit-taking activity, as those who had capitalized on this uptrend move may want to start taking some profit at this point, especially as market participants anticipate the CPI data coming up later today. Now, if this is going to persist, how do we intend to be part of this move? So for me, I have a support line here at the $72.75 level, just right here. We can see since yesterday morning how this area had continued to serve as a demand zone, and not until the last hour we saw price break down that structure for the first time in 24 hours. Now, for me, another thing I'm also noticing here is the evolution of price action into a potential double top structure, where this same $72.75 level will be serving as a neckline. And of course, to validate this reversal setup, we will need price action to break down the neckline, possibly retest the structure to continue that decline. And it appears that the last 1 hour 13 minutes have seen price break down the structure, giving us signs that sellers may likely be pushing further to the downside as a result of profit-taking activity. So I personally have missed out on this one. Let's see if the market will come back, retest the structure. If it does, I want to be part of a bearish move to the downside. So at this juncture, I would like to place a sell limit order, obviously, and place a stop loss maybe somewhere above the $73 area. So I will just do that right away, so that we do not miss out on this move. So a sell limit order, just in case price comes up into the structure. We have the stop loss somewhere around this above the $73 area. Then I can put my TP somewhere around the $72.50 level, which is currently the key level for this week. So there you go. We have a sell limit order placed around that neckline. So let's see if the market will come back to do a retest of that structure in an attempt to continue the downtrend move. So okay, $71.50 level. Sorry, I used 72. So the key level for this week is 71. So let me adjust the TP target there, and let's see what is going to happen today. So I want to wish us the best of luck on this one. I have no other choice than to remain bearish as long as price still remains below the potential neckline of that reversal pattern at the $72.75 level. Now, in as much as we maintain this counter move, we also want to open the potential for an uptrend scenario as well. You know how we do it in this community. Of course, we in as much as we keep a direction, we ensure that we also stay on standby to capitalize on the opposite if the market goes the other way. So around this area, we have a structural detail here. That is a range bound structure. We have a resistant line at the $73.175-ish, somewhere around here. And for me to buy at this point, I would rather want to see price action break out of the $73.175 level before I could join a bullish move, taking out all the sell positions here for confirmation sake. So I will place a buy stop order just right above the $73.175 area, then stop loss around the $72.90 level to position myself for a breakout of that structure. So let's do that right away. So I do have a buy stop order at the $73.175. So we said we are going to be having the stop loss where $72.85. Let me put it at $72.85 level. Then I'll put my TP around the $74 area, at least in the meantime. And if the momentum gets stronger, I could adjust accordingly, extending the TP in that case. But in the meantime, let's not be too over ambitious. So this is what we are looking at today. A very, very simple trading setup with a range bound structure where within it we have a potential reversal setup in the form of a double top structure. And of course, that's called inside bearish opportunity. So we've missed out on this one. So let's see if the market will come back, retest the structure for us to continue the downtrend move. And if the opposite happens, price climbs up, takes us out of the sell position, a breakout of the $73.175 level will be a good opportunity for us to buy. So this is what we are looking at today. Simple trading setup. Let's exercise patience and allow the structure to mature. So I would like to, this is my simple view here. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So, in the absence of no questions, I do want to assume that we are all on the same page, right? I hope you've marked out those levels accordingly on your chart, as we are going to be needing them as a reference point to guide our independent trading decisions. And if it so happens that anything new comes up that I never mentioned here, or any new technical setup arises on the chart before the CPI data today, I will definitely update us on both my Telegram and TradingView platform. So that is that on the US All Sport. I wish us all the best of luck on this one. So moving on to the next asset on our watch list. Stay tuned. So the next asset we will be looking at now is the USDJPY. Of course, we've done tremendously well on this particular asset. Remember at the beginning of the week, we initially had a buy. In fact, it went into a loss for me personally. We had a buy somewhere around here. We remember I told us that if you had missed out on that buy position, you want to be having a buy limit order around the 152.1, which I did. It got triggered and then it nosedive close to the key level before we saw another buy happen above the 152.00 area. I do hope you took advantage of that opportunity as we saw price break out the 152.2 to continue that uptrend scenario, giving us over 175 pips move since the entry point at the beginning of the week. Well, I think I hit my and thanks to in fact Trump's tariff plan, which definitely has weighed on the Japanese economy. We saw U.S. President Donald Trump impose 25% tariffs on steel and aluminum imports and hinted at an additional tariff on automobiles, pharmaceuticals, and computer chips. And in fact, this raises concerns about Japan's economic stability, weakening the yen. You know, Japan is majorly an exporting nation, and most of these raw materials are exported to the US. So we want to be monitoring Japan's response to US tariffs. There is this ongoing negotiation with the US government. So if Japan secures an exemption from tariffs, it may ease economic concerns and support the Japanese yen's recovery at this point. But if it doesn't, we would likely be seeing the US continue to rise to the upside. And then the strong US dollar amidst the hawkish Fed signals. I told you earlier how the Fed chairman struck a hawkish tone, stating that inflation is still somewhat elevated and that the Fed is in no rush to cut interest rates, which obviously has supported the US dollar in the last 24 hours. Now, everyone wants to hear what he will be saying today again, and this could continue to All right. Sorry for the break. I'm sorry for the break. We had some technical issues, but thank goodness we got this resolved in good time. So very glad that we are back on. And before the break, we were talking about the USDJPY. We were talking about the market drivers, what has been influencing the sentiment in the market so far, and of course how the strength of this pair still remains to the upside due to a stronger US dollar amidst a hawkish outlook from the Feds following Jeremy Powell's testification yesterday, and of course the tariffs and potential in the US and market sentiment, which obviously had been supporting the US dollar in the last 48 to 60 hours of this week. And I was saying, in as much as the potential is looking very bullish, that we will not ignore the fact that the Japanese yen could still has a room to gain traction, considering the speculations around Bank of Japan's interest rate hike. The governor of Bank of Japan reaffirmed that the bank is committed to achieving its 2% inflation target, and the recent wage growth data backs the case for another Bank of Japan rate hike at the March meeting. So this definitely has a potential of giving the Japanese yen some room to rise. And then if the negotiation with the US to exclude Japan from steel and aluminum tariff, which is ongoing, if it turns out to be successful, this could reduce economic pressure on Japan and support the Japanese yen as well. Now, in as much as all of this is in play, currently the market is like in a bit of an indecisive phase as market participants look forward to the US CPI data, the impact of the US CPI data, where a hotter than expected CPI print could reinforce the Fed's hawkishness, boosting the USDJPY along the line. And if we see a weaker reading, this might weigh on the US dollar and trigger a momentum for the Japanese yen. And of course, the indecisiveness in this market can be evident on the chart, as you will see here. In the last 1, 2, 3, 4, 5, 6, 7, 8 hours, the market has been a little bit choppy, confined within the 153.745 and the 153.450, giving us what may look like a potential uptrend continuation pattern in the form of maybe a bullish rectangle or a flag pattern, depending on from which perspective you are looking at it from. And of course, the validation of this uptrend scenario will happen at the emergence of a breakout retest of the 153.745. So for me, I already placed a buy stop order at the above the 153.745 with the hopes that the breakout of that structure will welcome more buying opportunities for us. So if you look at the trading panel right at the bottom of your screen, I already have a buy stop order placed for that particular entry. Now, for the fact that price is in a range bound, and I did tell you about the potentials that sellers could also come in, we will not ignore the breakdown retest of that area too as well. That is, breakdown retest could signal a temporary move to the downside, at least in the meantime. So for me to sell, I would want to see price break down, then retest the structure for confirmation's sake before jumping into a sell. Now, while we sell the USDJPY at the breakdown retest of the 153.450, I want us to take note of this major trend line we talked about here on Monday. So remember, we talked about the importance of this trend line. For those of you who saw my session on Monday, I said this trend line here had played a significant role in pushing price to the upside. So you can see anytime price comes to retest it, we see price move up, test it, it moves up. The same thing also happened during the last week of January. Test it, it moves up. And then at the beginning of this month, we saw a test which moved up as well. Now, right now, where price action has broken out of that structure, there is a high chance that price could come back, retest the structure in an attempt to continue the uptrend move. So why am I explaining this to us? Well, if we happen to sell the USDJPY at the break of the 153.450 just right here, that is the breakdown retest of it, as soon as price action moves close to this trend line, so we are talking about how many pips there, about 50 pips approximately, we move all stop losses to secure the sell position while we monitor how price action reacts to this trend line around the 152.8 or 152.9 area. Now, depending on what happens around this area will determine if we are going to be adding more sell or getting ready to buy the USDJPY again. Now, what are we going to be looking out for around this trend line? Now, let's talk about the bearish potential here. So if price action breaks down, retests the structure, we are willing to add more sell to the existing sell position. However, if sellers find it difficult to break through and we continue to see buy pressure around this area, and if thankfully it evolves into a reversal pattern, let's say a double bottom structure, a breakout of the neckline will be all we need to confirm that the uptrend is now visible. So if we are selling below the 153.450, we are going to be taking into account the potential that price could retest this trend line again. And if it breaks it down, then definitely we want to be adding more sell to the existing trade. So our simple setup for today is basically a range bound structure between the 153.745 and the 153.450. I have a buy stop order above the 153.745, while a sell will only be taken at the breakdown retest of the structure while we wait and see how the market reacts to that trend line. So that is my simple view on the USDJPY. I do encourage us all to mark out these levels and structures accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So there you have it, my simple view on the USDJPY. If you need some further clarifications or you have any questions to ask, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right. So I want to believe that we are all on the same page at this juncture. So permit me to move right into the final asset on our watch list for today. So the final asset we are looking at today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, despite the fact that we missed out on that buy that took place at the beginning of the week, remember this was during the Asian session, And in this part of the world, we are sleeping when this whole situation happened, but we were able to join the break above the 2,892 during our Forex Morning Mastery on Monday. And remember, I placed the TP target at the 2,920. I never knew price would break out of that structure, but thank goodness we were able to make about 280 pips thereabouts on that position. And for the last 36 hours, we've seen price action retrace back into where our entry point came at the beginning of the week. And this bullish momentum we've seen so far this week is can be attributed, let me put it that way, to the global trade warfares, Trump's tariff plans, geopolitical risk, which obviously supports safe haven appeals for gold, and then everything is looking very promising in favor of the gold commodity. Now, in preparation for today, we need to monitor a lot of factors before we can make any informed decisions around this particular market. First of all, we want to monitor the inflation data closely. So if the US CPI comes in hotter than expected, the Fed may keep rates higher for longer, which could also pressure gold further. And a weaker than expected inflation print today may boost the gold's momentum to the upside. Then we also want to watch for trade war escalations. That is, if Trump expands tariff to other sectors. So I will be listening to the news. Expect increased demand for gold as a hedge against market instability. At this point, I would want to be looking for buying opportunities on pullbacks. And remember, we've seen a pullback. We saw price come back into the 2,890 area a couple of times. We saw it happen yesterday during the New York session. It also happened during the Asian session today. And it appears we are within a good spot to buy again the XAUUSD. Then we're also going to be keeping an eye on the US dollar strength, where a continued rally in the US dollar could put further downside pressure on gold, while any weakness in the US dollar will support the gold's trajectory at this point. So if you would ask me at this juncture, I think we are at a critical point in this market. That is that area between the 2,887 and the 2,892. And of course, this area here was where we had our first buy for this week. We saw price break out of that structure, that's highlighted area between the 2,887 and the 2,892 to test the 2,940-ish thereabouts before we saw price retrace back into structure, and it has been finding buy pressure around this particular area. So this is what I saw this morning, so I decided to place a buy position above the 2,892, though I have the position currently running with about 8 pips loss, I think. 8 pips, 9 pips loss currently on this one. So I still have a strong feeling that the path of least resistance for gold still remains to the upside based on what we talked about earlier. That is the Fed's the geopolitical risk, which supports gold price at this point in time. We all know that continued uncertainty in the global politics and potential economic fallout from Trump's trade policies always sustains gold's appeal as a hedge against instability. And so for me, buying the gold commodity is looking very reasonable at this point, and having the stop loss way below the 2,880 is enough to give breathing space for price action to move around today. So I'm looking to buy. I've already bought anyway. So if you're planning to buy, I think above the 2,892 is looking very reasonable to do so. Now, in as much as I'm looking out for buying ideas around the structure, we cannot ignore the potentials that sellers could come into play. You know how we do it in this community. We always try to be on standby for whatever opportunity the market presents to us. And what are the chances that sellers could come in? Well, we could see market participants bank on the hawkish Fed comments, which could pressure the gold to the downside. I told you earlier that the Fed chairman stated that inflation is easing at this point, though it still remains above the 2% target. And this obviously has sent a positive narrative for the US dollar in the market, that the Feds may likely keep interest rates steady for an extended period of time, which is very negative for the gold commodity. Then the profit-taking activities near record high area is also there. So we have an overbought conditions at this point in time. Price is within uncharted territory, very, very high, all-time high record, and anything could happen. The fear of missing out could come in as those who had capitalized on this bullish move all the way into this high, out of fear, may start taking some profits off the chart, and this could lead to a spiral, pushing price further into maybe this ascending trend line we spotted on the higher time frame. So we need to take this into account too as well. So the chances that sellers could come in is still also there. And where will it seems reasonable to consider selling the XAUUSD? Well, for me, I would like the price to take out all the buy positions here, which has been a support line since yesterday's New York session. So I would like to see price break through that structure, retest it before I want to join a sell, then probably place my TP target around that ascending trend line I talked about earlier, which lines up exactly with where price action started this week at the 2,856. So we will be looking at, let's see, about 300 pips if that is going to be the case today. So because I don't want to miss out on this one, I would want to place a sell stop order for the gold commodity right now below that structure, so that I don't know what could happen. It could go in strongly to the downside. So let me just place my sell stop order there so I can capture that move if it ever happens to that downside. Then TP target maybe around the 2,860. I don't want to be too greedy. That's about how many pips that is. That's about 260, 250 pips thereabout. So let me place that one too right there. So 2,860. Because this buy pressure we're noticing here has been persistent since yesterday, and despite all the strong buy pressure here, price is struggling to maintain bullish momentum above the 2,892. So it increases the chances that this area could be breached and broken to the downside. So let's keep this noted. So our center of focus today is just between the 2,887 and the 2,892, where depending on the direction of the breakout will give us an idea of where price action will be going today. So mark these levels out on your charts. You need them as a reference point to guide your independent trading decisions for today. Unfortunately, I will not be able to run the go-go challenge. I didn't do it on Monday too as well due to some family runs I had to do. But hopefully Friday stroke next week, we will be back again during the go-go challenge to scalp the gold market one more time. So there you have it, my simple analysis on the gold commodity. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I'll take another 5 seconds off. Let's see if there are any questions before we go ahead and round off today's Forex Morning Mastery session. All right, guys. So, in the absence of none, so I take that as a valid confirmation that we are all on the same page. So, it's on this note, I think we have come to the end of today's Forex Money Mastery. It has been a great moment with you guys. I really appreciate your support by clicking on the like button. For those who are yet to click it, please do so right away. It doesn't cost you anything. And for those who clicked on the like button, thank you very much from the bottom of my heart. I really do appreciate it. So, today we were able to take on the three financial instruments on our watch list. It has been a wonderful week for us so far. We bought the USOILSPOT twice at the beginning of the week, all of which hit TP target. We bought the USDJPY, which also hit my TP target as well, and then the XAUUSD, and we're looking forward to build on that momentum as we head into the second half of the week. And to do this, we have simple trading setups duly recognized, identified on our chart, which we are going to be using to navigate the market today. I do hope you marked out the structures accordingly. If you have done so, well done, kudos to you. So all we need to do right now is exercise patience and let's wait for the structures to mature before jumping into any of them. And for those who joined us for the first time today, I do hope you were able to gain one or two things from what we have discussed here today. Trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach, which eventually you can build on to make your independent trading strategies. So I welcome you guys once again, and I look forward to seeing you all again on Friday as we delve into the last trading day of the week. Same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done as we prepare for the last trading day of the week. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful, wonderful evening. Bye.